9:30 opening bell on the 11th. Happy Monday. Let me get the risk disclaimer. We know there's risk in trading. Please know as you trade capital only. Do not trade with money you cannot afford to lose. Whether you're trading stocks, options, futures, forex, cryptos, you know the deal. Social media, best place to find me is right here on YouTube, youtube.com/Chris Pulver. Check out the channel, check out the video series that I have out there from Trading 101 to keep it seriously simple to just our live sessions we do every single week. All right, let's have a look at the charts this morning. Look at currency strength, the dollar, gold, silver, oil, Bitcoin. We're at 448.71. We had a pretty significant gap higher. So taking a quick peek at the futures market, not Mark. That's not what I wanted. Let's go back to the SPY. Market watch is what I wanted on a new tab. There we go. So gaps open. We have futures market for the Dow up 0.25%, S&P up over 0.5%, NASDAQ futures up 0.84. Big news this week is going to be CPI data on Wednesday for the U.S. Let's see if the forecast finally popped up. We checked on Friday. There was no forecast. And right now, you can see that the market's anticipating a 0.4% higher uptick. So part of me thinks that the move for the week, we're pushing up here, 448 and change. Previous highs around 453 and 454. I'm holding off on a straddle for right now for some directional plays with my Delta Trader class. Partly because I guess upside potential could get us to 459. That's a $10 to $11 move on the week. That puts us back to the highs in July. So that would be a post FOMC high if we're going to push another $10 to $11 to the upside from the open. But you have to remember that the open technically was the close from Friday at 445. So if we push up to 455 or 456, I need to make sure that any call options are going to get paid if we go up to that level. So I might look at some put sides out of the money to make it a little bit cheaper. Go to expirations out to Friday. We'll talk about that in class today. Currency strength chart overnight. Aussie on top. Yen and New Zealand second. Dollar Swiss weakest. Anything on the yen crosses that really stand out? Let's have a look. Aussie yen. Let's go to the daily. Not really. Still pretty messy. Just getting logged into the session here. Good morning, Chris. Good morning, FK. Good morning, Catherine. And good morning, Paul, Gail, Trish, Denise, David, Donna, Gary. Good morning. Gary, I got your email. I'll send you a reply this morning. Okay. Morning, everybody. Happy Monday. Morning, Larry. Here is, for anybody watching the recording that wants to join the Discord channel, here is a free invite. There you go. Morning, Andrew. Okay, Aussie yen, not much excitement there. CAD yen still very choppy. Resistance sitting around that 109 to 110 handle. Swiss yen starting to just barely get below these previous lows in price, but we haven't broken the trend line yet. Spending more time on the right-hand side of the trend line is pretty good. We'll see if we get a big drop towards our 200 exponential moving average and some other, well, really just a massive correction on the Swiss. But it's really the Swiss, and we'll know more next week on the 21st when the Swiss National Bank has a rate decision. We'll see if they pause. If they pause, that could be a good thing to show some carry trade happening on a lot of these Swiss pairs. Euro Swiss off the lows. Pound Swiss 111.70 off the lows. That's good. New Zealand Swiss off the lows. We got some entries in last week on Friday. New Zealand Swiss, CAD Swiss, and Aussie Swiss for the portfolio builder class. There's a pretty good bar count there on the daily time frame actually. So last time we touched on the daily, that is 219 bars. So even pretty aggressively on the CAD Swiss, I like that bar count. And hopefully this is starting to sniff out a buy zone. If we not only hit this 200 EMA, but get to this high, rally up here, take out the high, pull back again, and then see if we get a push for a 3-wave and a 5-wave move. I like all these levels up here in the CAD Swiss. So this has been a trade we've been in the flex room for quite a while, but started to get repositioned for it. I opened up a brand new account to position for this from scratch. trying to grow that account pretty aggressively over the next hopefully 6 to 12 months. All right, let's go dollar and gold and silver and oil. Let's go dollar here. Dollar, pretty massive pullback today on the daily time frame. Let's see if we have a gap fill today. Where are our levels? I'm going to see if we can get a rejection off of 450, and I'll look to short today, just directionally in the SPY. I'll keep an eye on that one. Dollar index pulling back. CPI data this week. If the market takes it poorly, meaning we do have that uptick in inflation, this is expected to be 3.6, which was 0.4 higher. Let's see if the trueflation reading is a little bit higher as well. 2.68. We're just kind of sideways here. We're not at the lows of 209. We're at 2.68. Previous reading 3.2. Forecasted this week for 3.6. Obviously, we don't know what the print is going to be on Wednesday morning. Would it print higher? That would be, I'd say that'd be a pretty bad sign for the market. If we see 3.6 forecast and it comes in 3.7, 3.8, 4%, that's a big miss, number one, with higher inflation, and number two, that's way higher than what we had for the previous year over year. So there should be a decent amount of volatility from this week with the inflation numbers, and then coming into next week's anticipated Fed on the 20th. Keep in mind that the Fed on the 20th is likely going to be a pause. ECB press conference, we have a rate decision this week on Thursday, I think, right? Press conference, or is it just a press conference? I don't see. Yeah, we're here. So 8:15 a.m. Expected to raise rates. No, pause. Sorry, pause at 4.25. Press conference at 8:45. Got it. Okay, so that's that. So yeah, we got a rate decision this week on Thursday. U.S. CPI on Wednesday. All eyes on the Fed next week. I think next week we also have the Fed, the Bank of England, and the Swiss National Bank Wednesday and Thursday. So next couple weeks will be pretty volatile as the market's still trying to figure out what we're doing for September. Correction is still likely. How bad does it get in September? I don't know. I mean that we'll find out this week. I mean, what I pretty confident in this week with the data that we have over the next 2 weeks, especially, is that we should have some big candles. So is it big enough to have, today? So we closed here, we opened here. From this area, do we have, at least a $10 move, one way or the other? If we have from the close last Friday, back up to the highs would be around an $8 move. That's roughly 75% or so of the weekly trading range. If we open here and go lower, so open here, but we already put in an interim high for today, so that'd be our, potentially high of the week. High of the week, and we go lower for $8 to $9 to $10. Coming back into 440. The big kind of even correction level on the SPY would be 425 to 420. So we will see. All right, Q's on the same thing. The weekly trading range is $13. We had a gap open. So from last week's close, which would have been close around 372.58, and an open today at 375.66. So about a $3 gap. Close at 372 and change, open at 375. Yeah, so about a $3 gap today. And again, just measuring, this is about a $13 weekly trading range. That pushes up 833 if we retest the highs. So if we, again, 8 to 9 to $10, can we get our options to price out accordingly where these are profitable if we come back and retest the highs? I hope so. I certainly hope so. The issue is going to be, where's that call option at and what day does it hit there? So, right now we're seeing some pretty aggressive gap filling for the day. We're at 374. Let's see if we get a push back down to 372 on the day. We'll find out. So I'm just not going to force any trades yet. Looking at a potential straddle for the week. And gap fill today would be, we gap up towards 449. We had our close last week at 445. So I'm going to see if it just kind of struggles today. Like it comes back up to 448 and change, maybe rejects at 449 to 450 on the SPY, and then look at a short-term sell But maybe today's timing is not great, right? Maybe we leave the gap there and that gap gets filled later in the week, which is why I want to buy myself a little bit more time. And we talked about this a lot in the Delta Trader class. Okay, DXY dollar index we did, pulling back today for the first time in a while. We've had 8 straight weeks of bullishness on the dollar. So 1, 2, 3, 4, 5, 6, 7, 8. Finally getting a pullback week. There is still some potential upside for the next couple of weeks on the dollar to hit that 7 to 11 candle area, pushing us back into equal levels around 105 or 106. We're currently trading at 104.61 with a high last week at 105 and change. Oil pushing pretty darn bullish. U.S. oil nearing up to $90. We've said for the last, once we broke out of this support at 65 and 67.50, my target was set at $90 to $93, and that's right up here towards this yearly pivot. So I think oil's still bullish for right now. And I know it feels late. I mean, I wouldn't want to participate a ton now, but we were long, in here we got long on USO, and that's paid us pretty well. So anyway, oil's probably going to stay stubbornly bullish. We have a pretty big commitment out of Saudi Arabia to continue to cut. That production cut will last until December, and I'm sure there's going to be plenty of jawboning and inventory supply and demand data that we'll see over the next couple of months. Gold and silver. Gold is quiet. You can see a big range here on the weekly time frame. Resistance at 2075, major support at 1675. I'd like to get a chance to buy gold down here. I just don't know if it's going to get that low. I think in the midpoint between 1830 1850, that's not a bad spot to look for some of this. Come into this midpoint around 1850, look to see if we get a buy point, and then watch the dollar. Okay, if the dollar is weaker, gold gets bid. If the dollar is stronger, gold continues to slide. It's been a pretty strong correlation this year. Silver going sideways again, pretty good channel support if it holds here and then breaks. Maybe this wedge holds and we get another up move in silver. Bitcoin chart alarms are set. Low volume, pretty low volatility. Here's the daily time frame. Vulnerable to the downside with just a break. If we get a break below 25,000, I would say look out below. Let's see. So from highs at 447. All right, I'm going to start looking at some options chains here. Looks like market's more interested in possibly filling a gap today. I'm going to see if we get a retest before I just jump in. I'm going to get my broker platforms opened up though and start looking at some spread or some straddles. Any charts you'd like me to take a look at this morning? Then one more broker platform here. I didn't have any assignments over the weekend. Buying power's back. I got rid of my KHC for a small loss. I lost 36 bucks on that one instead of 200. So that was a trade we took in equities on demand. All right, get that opened up. So looking at straddle on the SPY, current price is 447.50. See what we look at around 448 at the money. And I'm going to go out to Friday's expiration. Ooh, that's a little bit on the pricey side. Maybe 3 strikes out, 447 and change. Hang on a second. Go here. There we go. All right, just letting those broker platforms open up. What I was looking at was this. So currently trading at the money. We're right in between, right? So 448 slightly up. If I did a 447, oops. So 447 versus a 448, that makes it a little bit cheaper. Could price hit 453 on the week? Yes, that gets us back to a previous high from, I think, last week, right? Last week on the 1st, so I guess that'd be 2 trading weeks ago. That would have been Friday before Labor Day. So that's 453 and change. This $2 debit could turn into $5, which gives us $3 of credit. The issue with that is that puts are way more expensive right now. So that's kind of nuts. Now 447 put is, I don't know. I can't believe. I mean, that's a lot of basis points. I mean, a dollar difference between, if I go one strike out of the money, that's still really expensive. Wow. I don't know. Clearly, the market's pricing in a lot of put volume or something because they're making puts real expensive. 447.25. All right. So anyway, let me get back to Bitcoin. Pound yen, Swiss pairs. Yep, Catherine. Okay, that's fine. Pound yen. All right, that's fine. So let's do pound yen. Pound yen. So in the flex trading room, we have a trade right here. We have a pending sell right there. If price falls down and we get filled, then I'm looking to take some profit here and then put in head and shoulders and then look to participate in that head and shoulders. So I'll probably start looking to sell that right shoulder, which is potentially early, but definitely looking to stack up some breaks of the neckline to get back down into this previous high or see how low this thing wants to go with major support down here around 156. So it would just start out with measurements. You know, if we go high to low, lower high to lower low, that'd be target 1. If we have another wave to the downside, target 2. So do I have anything running on pound yen now? No, because this could also just be a push, a pullback, and then we have another push coming, right? FOMC is next week. I'm not sure if we have Bank of Japan next week as well. We probably do. Usually it's right on the coattails of FOMC. Let me go back to that economic calendar. So if we go into next week, Wednesday, Thursday, so there's your FOMC forecasted to stay the same at 5.5. Swiss National Bank on Thursday morning, Bank of England on Thursday morning, Japanese yen Thursday to Friday. So Thursday night, yes, monetary policy statement, policy rate, economic outlook. Again, doubtful that the Bank of Japan is going to do anything different, but we know that there's a lot of volatility just hanging out around these Japanese yen crosses. Yep. So pretty wild stuff. So again, yen crosses. I mean, my thought on the pound yen is this: if we get filled on a stop sell, great. I'll get filled there. I'll try to grab some profit if we score a point, and then if we have any pullbacks, I'm looking to re-enter stop loss above the swing high and then go after a symmetry move. 170 is a pretty good number. If we have another push lower, we come back and retest the neckline. Perhaps it's going to be volatile, so we could break. Let's say we break the neckline, come back and retest the neckline, and then go. That'd be the measured move from here. So I'd say between like 170 and 165, that's a pretty good profit window on the pound yen if we get confirmation. And that's the big question mark is if. All right, Swiss pairs. I talked about those earlier this morning, kind of right in the onset. So Aussie Swiss is heading up. We got some trades in last week on Friday during the portfolio builder class. We had an hour of that. Let me go portfolio builder. Let's see. There it is. Right here. So we had some pending orders. Our stacked orders might be getting filled right now, which I'll double check. But Aussie Swiss, CAD Swiss, and New Zealand Swiss were in. Euro Swiss, I'm going to start looking at positioning on today. And we can test the waters here, get some stack up orders to the upside, get some scaling orders to the downside. Dollar Swiss, dollar's pulling back, but that's fine. I'm still going to take a test. And then if the dollar pulls back more, we'll kind of scale in over the last from 89 back to 85 or 89 even down to 8,000. This one, if this would actually be a great setup, and it is valid. CAD Swiss, and so look at that bar count on a daily time frame. So CAD Swiss and Dollar Swiss both have over 200 bars on the daily time frame. So I would still be willing to put in a trade now and go after that 200 EMA. If we take out this recent high, then it looks a lot better for, let's see if we can test this level, maybe even break this high. Any pullbacks I'm looking to buy, there's a 3 wave, there's a 5 wave profits up here. So it's really just big structure on the Swiss pairs, big structure on a lot of those setups. Just give us a trend line break, get on the right hand side of these trend lines, wait for some highs to get taken out, and see if we put in some lows on Aussie Swiss, CAD Swiss, dollar Swiss, even I mean pound Swiss too, New Zealand Swiss as well. But there's a lot of good looking setups. So trades looking pretty good. I'll go back and double check which ones have been filled. Some of these were stacked up. Some of them stacked up are pretty aggressive. So I'll double check those entries. Okay. All right, all right. So this week's news is probably all going to be revolving around CPI data. I'm expecting to see maybe an $8 to $10 move on the SPY. Maybe you pay for that implied volatility on the Qs. Maybe a $9 to $11 move on the Qs. The weekly trading ranges are both higher. I'm trying to look somewhat conservatively, just in case the market's really noisy. But we could have a big wick up or a big wick down for a lot of volatility, maybe not a lot of direction. And then next Wednesday, FOMC again. Probably a bit of a noisy day, but subject to a lot of volatility. See where the markets kind of open up the movements. And I just think that the overall stock market is under some pressure. I mean, September naturally is like the September effect. It naturally is a bearish month in the markets. Why is that all the time? I don't know. I think part of that is because come out of summer, offer to see if there's a dip or a pullback, and then October to December is our rally. So I mean, if you trade Q4 and you trade Q1, those historically are like the most bullish window to be in stocks. So if we have any corrections, I'm sure there's going to be some eagerness to buy. I would say that the SPY does a lot of damage technically if we take out this. If we're trading below 420, I'm a little bit more neutral, right? I mean, I'd say in this area, this is a correction. Like we could just have a wedge, something like this, where there's a lot of indecision over September. But because we had this trajectory, we could still have a move higher, right? But there's all sorts of storylines here. I mean, honestly, by the end of the month, there could be like another not debt ceiling, but another potential government shutdown for the U.S. that could spur things along in bearishness. We've got higher inflation data possibly printing next week. Fed language could be harsh and hawkish again. So, I mean, there's a lot of stuff out there that the market can latch onto. Earnings wise, things have been okay but not great. It's really been the Mag 7. And so the real question right now, and I'm going to check this really quickly, going into like a market breadth indicator. I mean, right now, the 50 EMA. Okay, so if you can see this right here, we box that in. So the 50 EMA is a pretty good sign on the daily time frame of market breadth of what's bullish, what's bearish, right? So right now, we have around 54% of stocks below the 200 exponent or the 200 simple moving average, which is a bear market, right? Sell zone. And then on top of that, we also have price 66% or per 7, 66% also below a 50 simple moving average. So market breadth wise, we have a lot of stocks that are in straight up sell zones. The 50 and the 200 have crossed prices below both of them. That's not a good sign for the broader market, right? But your top gainers, I mean, everything shows green here in the heat map because we had a gap higher. And a lot of times when there's a dip, notice that the bigger moves have been going into the Mag 7. I mean, look at today's moves. Meta's up, Google's up, Microsoft up, Amazon up, Tesla up. Those are, I mean, obviously huge market cap companies. Big news out of China last week was something like 30 million units are going to be banned from China. Any government officials will be banning iPhones. So that, I mean, is it a deal breaker for Apple? Of course not. But it's enough to at least make the market notice. But I still like, I mean, technically, I think Amazon and Google look probably the best of all the Mag 7s right now as far as wanting to get back in and maybe dollar cost average into. The other ones have had some great runs for the year, and I'm kind of out of them. Nvidia, who knows? Nvidia comes back and fills the gap. That gap fills at like $300. But do we go back and retest 500 again? Probably. It's super volatile. There's been these crazy like $50 swings on Nvidia over a week. So I don't know, option pricing on that one's kind of garbage unless you're willing to pay a ton for it. So I'm not really trading it. All right, let's see what we get for today. 450, 447. Okay. So does that answer? So Yvonne asking pound yen, we did that. Catherine Swiss pairs were good. Yes. we got the BOJ next week with Bank of England, with Swiss National Bank, with the Fed. We have ECB this week. We have CPI for the U.S. this week. There will be some volatility. So what I'd like to do here is start getting transitioned over into the equities on demand class. I want to start looking at some trades for the week for Delta Trader, equities on demand as well. If you're interested in taking a little straddle, I'm going to price this out accordingly. Like I'm not going to pay for the same contract. I'm not going to pay 50, 60, 70 cents more. There's no freaking way. So I'm going to have to manipulate this where maybe I can get, 2 contracts here, 1 contract here, but that's no longer a straddle. That's just directional plays, right? So we have to think about how much are we paying for with these straddle positions if we're going to take them, and clearly it's very biased to the downside right now. But I do want to start pricing that in because we're sitting here at 447, sub 447. We've already had a move of around $1.80 on the day to the downside after a gap higher. And if there's a directional play, I'd like to get it, but I want to see how I can get things priced in. Also, it might be possible that we don't have to force a trade this morning, and we can wait for something end of day. We talked about this on Friday. I was looking at a trade end of Tuesday to just take in a Tuesday afternoon. And again, not really much movement on Tuesday afternoon, but Wednesday for CPI, Thursday, Friday, all day trading, and see if we can just pay a little bit less for time. So maybe today I kind of do that. Maybe we talk about doing something end of day Monday that would make the time premiums go down just a little bit, and then we can get positioned more at the money towards the end of the day, or look at our kind of 25 and 30 deltas. Okay. So, all right, I'm going to switch gears here. Thanks for joining me this morning. So this week I will be traveling on Thursday and Friday. So the 14th, 15th, I'm going to be out of the office. That will affect the class schedule. So Thursday and Friday, no classes from me. That includes Flex. That includes equities on demand, and then that also includes the Delta Trader and Portfolio Builder class. A live class on Friday we won't have. Okay, but I have Telegram updates. I can do like a quick message update, email update. That's fine. We'll check our positions, but today through Wednesday we're going to be really busy in the trading rooms getting things positioned. So for Portfolio Builder, I'm going to start continuing to build those positions on Euro Swiss, Pound Swiss, Dollar Swiss. Maybe putting in some pending orders on others, or just sitting on the sidelines waiting for the BOJ next Thursday. Okay. And if I really think there's gonna be a ton of movement on the yen, it's probably coming in November, when the actual, if there's a probability of a Fed rate decision, it would be November. I read 48% probability, which means that's up from before. Okay, so it's not. It's 40. So it is going up slightly. And this is what we said last week. If this comes down to 50%, this goes up to 50%, then the market is just like, what's the Fed going to do? And maybe there's that other 25 basis points hike. We don't know. Obviously, if we see inflation print higher, that's going to put a little bit more pressure on the Fed to possibly raise rates again. Okay, is the market going to like that? I doubt it. I doubt it. But anyway. All right, everybody, I'm going to let you go. It's 10 o'clock. Let me switch gears to the trading room for equities on demand. If you do me a favor, hit that thumbs up button for me. If you're watching live, great. If you're checking out the video, awesome. Thanks for being here. And we'll see you this week. All right, let's have a good week in the trading rooms. I know I'm going to be gone Thursday, Friday, but I'm not done trading. Obviously, I've got trades to manage and things to take care of. I just won't be, at my computer, my seat to do live sessions. But looking forward to a good trading week this week and next week. Good volatility ahead. Lots of excuses for the market to move, and that's what we capitalize on. Okay. All right. I'll see you in the trading rooms. Thanks. Bye.